romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's at just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done for professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter, and from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday. Everybody's working for the weekend. Here it is. All right, today is Friday the 8th, 2016. There is one stock in the Dow positive on the year. Everybody's working for the weekend so they can get their paycheck and go where? Where? To Walmart. That's right. Everybody going to Wally World. Now, we had a error in the soybean, one trade a day, for the last couple days, and I apologize. I had rolled them, and I rolled them on the Concierge, but somehow they got rolled back on the one trade a day, and so my most humble apologies to all of our loyal followers in the kingdom. I'm just going to tell you, so you don't have to go look it up. Long above 873, short below 866. That's the ticket. All right, let's look at the numbers. China last night opened positive, and the world appeared as though it were suddenly going to be green again. And then there was some turbulence, and people said, I'm not so sure about that. And so we ran up, and then we ran down. Now we're trying to run up again. I want to give you some specifics here momentarily. Well, let me get the current numbers for you on this market on this Friday, the 8th day of January 2016. Okay. All right. Please cooperate, mouse. Mouse not cooperating. Hang on. By Jingos. See, it's China. I got a Chinese mouse. It says HP on top. Let's not be so hard on China. I mean, come on. They've been selling this inexpensive goods for a very long time. We've all benefited in some way. Or have we? All right, cash markets. Here we go. I finally got them. Now, see, it's not so bad. The Dow's actually up 36 points. S&P 500 is up 2.5 points. NASDAQ is up over 17 points. The only U.S. market in the red is the Russell, down 8 points. Okay? Now, crude oil. We expect crude oil to be down, right? 16 cents, which, I mean, it's hard to imagine crude oil being down 16 cents. That's almost half of 1%. Gold, we're sad to see down, $4.60. That's almost half of 1%. Terrible, just terrible. Mixed, the Nikkei down 69. The Shanghai, this is the one to watch, okay? Well, the Hang Seng, but really the Shanghai up 62 points. Now that's almost 2%. But don't forget, we had 2 days this week where the markets, where the Shanghai was down 7%. Hang Seng today up 120 points, and that's better than half of 1%. So maybe we're starting to, if not a rally, we can at least call it maybe we can call it bottoming action. How about that? Let's see. Okay, so the Nikkei, the Shanghai, and the Hang Seng up 120. So remember, Nikkei, Japan, down, right? 70 points. Shanghai, China, up 61. Hang Seng, up 120. Okay. Now let's go to the European markets, where I have no green to cheer you up with. The DAX is down 130 points. That's over 1.25%. FTSE is down 40, and that's 0.75%. And the CAC 40, they had job numbers today, I believe. Apparently they weren't so hot. They're down 70 points, CAC 40. It's 1.5%, a little over 1.5%. So Europe's red. U.S. markets are green with the exception of the Russell. Asian markets are green with the exception of the Nikkei. And our little basket of commodities, oil and gold, they are both in the red. Okay. And we got one stock positive for the year in the Dow, Walmart. One ugly part of the U.S. economy continues to bleed jobs. December's job report, to paraphrase my friend Todd, crushed it. Data out of the Bureau of Labor Statistics on Friday showed the U.S. economy added 292,000 jobs in December, and the unemployment rate held steady at 5%. Can't wait for our friends over at Zero Hedge to dissect that and tell us what those numbers really mean. But one struggling American industry continues to bleed jobs: mining. Mining and logging employment decreased by 8,000 in December. This was the industry's 12th consecutive month of employment decline. Mining and logging has lost 131,000 jobs since December of 2014. Now, I'm going to tell you something. When there's that much carnage, when there's that much blood in the streets, there is opportunity lurking. Start thinking about it, okay? I'm telling you, there's opportunity there. Mining drives the employment trend in this sector and accounts for essentially all losses over the month, minus 8,000, and over the year, 129,000. These losses were concentrated in support activities for mining. I mean, it's so bad the picks and shovels aren't even making money. And when it gets that bad, it's bad. Now, notably, mining includes the oil industry, and more specifically, the oil drillers. Given that oil prices have been low all year and are still dropping and are expected to continue dropping, it has a bunch of fascinating insights. it sums up the deteriorating level of confidence that investors have in Chinese policymakers. You know, this capitalistic surge that we saw in China would appear to be, I mean, let's not forget, their basic ideology hasn't changed. The portion with very low confidence or low confidence jumped from July to December. Just 6.1% now have confidence or high confidence versus 23% in July. Well, America at this point, I mean, how many, although, I mean, Congress did sign a bill to repeal Obamacare this past week. I didn't notice that getting a lot of airplay. Of course, the president's already said he's going to veto it. But it just goes to show you, if we can get a Republican president in the Oval Office, Obamacare, out the window. Ultimately, investors in China are buying the Chinese leadership at this point. Somehow, the country is trying to manage a transition in the economy, a devaluating currency, and a volatile stock market all at once. And if China's leaders are losing the confidence of foreign investors, one can assume things are going to get worse before they get better. Now, what does Mr. Trump have to say about China? Real estate mogul Donald Trump told the New York Times he would support the U.S. putting a massive 45% tariff on Chinese exports to the U.S. I would do a tax, and the tax, let me tell you what the tax should be. The tax should be 45%, and I built a great company. Okay, I did that. Now, Trump told the newspaper's editorial board in comments that were published yesterday, the Republican presidential frontrunner has made tough talk on China, particularly regarding trade. He is turning it into a signature campaign issue. But such a staggering tariff could also have a profound effect on the U.S. economy. Many economists believe tariffs like that proposal, 45%, would contribute to what is called a deadweight loss or inefficiency built into the economy. The basic economic argument is that tariffs have winners and losers, but the total amount lost would be greater than the amount gained in revenue and in protected industries. Trump told the Times he considered himself a free trader. He said, however, that the U.S. must flex its economic muscle to pressure China into creating a fair trade balance between the two countries. The only power that we have with China, Trump said, is massive trade. And if we can get a new president into the Oval Office soon enough, we'll gun. He left that part out. Right now, we have the bigger gun. Military is deteriorating at a rapid rate. We're still flying B-2 bombers. I mean, you heard him in the debates. You heard him talk about it. I mean, the superpower, she ain't what she used to be. And we need a Republican president in the Oval Office who's going to beef up our military. You know, national security has got to be it's got to be the primary issue for this primary election that we're coming up on pretty quick. You know what? Every time I hear this Carly Fiorina talk, it makes an awful lot of sense. Now, Trump made some very disparaging remarks about her. Of course, he says he meant no harm, and that's not what he really meant. But, and I don't know if you've seen his son talk. His son talks very well. That young man could be president someday. But let's not get the cart in front of the horse. Let's get Dad in office first. If that's the option, could Carly complement Trump and replace the nation's desire to have a woman in the Oval Office, also known as Hillary. Now, there's some talk that they are going to bring formal charges against her for some of the crimes she has committed. I mean, come on. Yes, we did make the mistake of electing someone who is not an American citizen. That goes against the Constitution. But are we going to now turn around and elect an outlaw, out-and-out criminal? What happened in Benghazi is a crime. What happened with the mail server is a crime. There's a litany of crimes in the wake of Bill and Hillary Clinton. And I think as we get closer to the general election, the pressure is going to become so great. The Republicans are going to have to pick someone other than her. And who are they going to pick? Bernie? I don't think that's going to fly. So I'm excited. I think there is hope that America can become greater. Trump wants to make it great again. I think it's still the greatest nation on the face of the earth. No offense to anyone tuning into the radio show that lives in another country. I mean, each person, I think, you should think your country is a great country. Trump, we still have a great country, but we can make it greater. We can get out of this stagnation that we've been in for a decade now. All right, real quick, this is the S&P 500. As price came down from, let's swing low, swing high. This is Basic Fibs 101. From the swing low to the swing high. I might have said that backwards. Swing low, swing high. Sweet chariot. 38% retracement. Nice bounce. Back to the 38 again. Not so nice. Back to the 38 again. Pretty nice, considering, right? We hit the 50% retracement. This is a daily chart. We bounce for 1 day. Now, I'm just going to be honest. This wasn't looking for it. I thought at the 50% retracement, we could put up a little more of a fight before giving way to the 62. But where did the market want to go? Obviously, it wanted 62 because it went there like a rock. Hit the 62. We hit a low of 28.50, and then we bounced. We put in a high. Actually, here's what happened. When China opened last night, U.S. futures went positive. We got all the way up to 64.75. Now, we've had an S&P trade waiting to trigger long at 1973 for 2 days. And somebody asked me today, how come you haven't been putting out the short trade on the S&P? And I said, well, it's kind of like fish in a barrel. And, of course, the other part of the story is that I do expect a substantial bounce. Now, the fact that we didn't get much of a bounce at the 50, and this bounce we got at the 62 has deteriorated as much as it has. If we don't see some recovery this afternoon, and if we don't see some recovery on Sunday night during the Globex Open, I think we should be very, very concerned, okay? If we take out the low of yesterday, this little box here, top of that, 1875, 1876, that's another 70 points lower in the S&P. That's another 700 points in the Dow, which will probably take Walmart back into negative territory if it hasn't already. So this is it. This is the picture. This is what we're dealing with. Okay. I'm going to go to Michael and he'll give us a recap of everything that happened in the live trading room today. Today's a perfect example of why we teach our students to go in, get your points, and go live life. I spoke to someone today, a very, very nice gentleman, who spends 8-10 hours in front of the screens each day, and it's not benefiting him. He's putting in more and more hours each day to figure out what he's doing wrong, and I strongly suggested to him, get away from those. He understands how to trade. He's been profitable before, but he's gotten into a rut. And I'm going to tell you, more indicators is not the answer. More oscillators, more gurus, more magic numbers, not the answer. More hours in front of the screen, not the answer. Understanding that the market, whatever market you're in, is always building legs in one direction or the other. We spent 5 minutes last night with a yellow highlighter in the partners meeting. We could frame that and hang it in a museum, because that just so clearly painted such a clear picture for every one of the partners, the very thing that we've been trying to convey for years. The market is building legs in one direction or the other. Once you know the direction it's building legs, all you got to do is hop on for one leg. In most cases, one leg is sufficient to get you your points for the day. They say you can't time the market? Come hang out in the live trading room. We'll show you exactly how we time it. This morning, we came out of the gate, bang, done for the day, but we're actually required to keep trading live in real time, real money in front of real people, because that's our commitment for 2 hours a day. You don't have that ball and chain on you. You can come in, get your points, and go. And that's what you should do. Because once you learn the trade, we teach you 2 simple trade setups. Once you learn those 2 setups, there's nothing left to practice. There is no 8 or 10 hour days. It's not required. It's not necessary. Come in, you get your points, you reach your goal, and go. Whatever your hobby is. Boating, golfing, as David jokes. I mean, come on. You got to have some kind of life away from the screens. It is not healthy. Sitting is the new smoking. So get your points, get up, and go. Michael's going to grab the screens. He's already got them. Michael?
Just took them.
Good morning.
Good morning. Good afternoon. Good afternoon. Yes.
All right, my friend. I can see your... There we go. The rest of the world can see it now. I'm going to hit mute, and I'll be here when you're done.
All right, great. I'll get started then. All right, let me hit record. Here we go. All right, good afternoon, everyone. Today is Friday, the 8th day of January, 2016. Today, in the live trading room, we made 23 ticks on the Russell. We lost 6 on Crude and 16 on gold, and we made 4 on the NQ. Okay, so that puts us up like $30 on the day. Now, what Dwayne was talking about earlier is this morning it took 5 minutes and 3 trades to get to $100 a contract. I continued to trade because I had to for another 2 hours, and I placed another 20 trades, and all I managed to do with those extra 20 trades was give back $70. On the month, we are up $1,325. That's over 5 trades, $65 a day. If you were to apply an $8 commission to every trade we've taken, you would be up net profit of $653. If you were to apply a $5 commission to every trade we've taken, you would have a net profit of $905. Again, down here, the annual total, because this is January, is going to be the same as the monthly total. 5 trading days, $265 a day average, and $1,325 gross profit. Now, if you have not taken our free trial, then you just need to go here to CFRN, and in the right-hand side, where it says register for a free trial, put in your name, put in your email, click on register for a free trial. When you do that, you will be sent a confirmation link. Okay, you must click on the confirmation link. If you don't click the confirmation link, you will not get a free trial. Right? You must click the confirmation link. All right, that is all that. Now, the trades. 23 trades we took. Most of them on the NQ. It was NQ, then Russell, then the ES and Crude. So I'm going to start out with gold. We only had a couple of trades here on gold, and we ended minus 16 ticks on gold. Okay, we had 2 trades. One was right here. We stopped out, minus 8. Another one right here, and we stopped out again, minus 16. All right, we missed this trade right here. Some of it back, and we missed this one over here, which would have probably been a break even. You see how gold just went sideways here for a really long time? Had a long trade right in here that I missed as well. Then during the break, there was a short trade there, a short trade there, and a short trade here. Okay, all of those would have worked out pretty well. This one, the cycle was going up too steep right here. Okay, so on gold, we ended with minus 16 today. Minus 16. The Russell, look at this movement on the Russell here during the break. You gotta love that. Now I'm scrolling back all the way back to the beginning of the day, because that is where we got our goal for the day. Here we go. All right, so we started out by missing this. Let's see, Bobsy. Okay, Joel, I imagine you're rebooting. All right, so we had a break even right here. We missed this trade, had a break even, missed this beautiful trade right here. We finally get into this one. We took 10 ticks profit on that. That is where we got our goal for the day right there on the Russell. All right, then we had a break even trade there. Missed a couple of trades over here, as you can see. Missed a couple of trades right in there. And there. And then it went sideways for a while. We had 1 tick profit there, putting us at plus 11. 10 ticks profit there, putting us at plus 21. Missed a trade there, missed a trade there. Missed a trade. Nope, we didn't miss any trade there. Sorry, and this one was going down into dynamic support, so we didn't have a trade there. Right here, we got 2 ticks profit, putting us at plus 23. I'm trying to scroll right now, and missed another trade there, and there, and there. And then it got really sideways. And at the end of the live trading room, we missed another one right there. Then during the break, the market moved around quite a bit here during the break. As you can see, had some pretty good swinging movement during the break. Just looking in here. There was a long opportunity off the BBC right here. We had put in a higher swing right there finally. So it was a long opportunity off the BBC right there. Then another one right in there. And there. And there. Okay, and a long trade right in here. And another one there. And there's a short trade right here. I'm actually going to take this short right now. Hang on. Okay. And I'm short right now on the Russell. There was a short off the BBC right here at 56.7. Okay. On that. Here. I was in at 0.5. So I'm going to throw my stop right there and take 10 ticks profit on that Russell short. All right. Let me scroll back here on the Crude. On Crude, we didn't have a ton of trades here on Crude today. You're not going anywhere, Bob? All right, on the Crude, we ended up missing a trade here and here to start the day. We took a break even there, and we had 1 tick profit right there. So we were plus 1. Missed a trade there, then we stopped out on this one. Put us at minus 7. Okay, then we had 1 tick profit there, put us at minus 6. That is where we ended the trading on the Crude. Now, during the break, Crude had a long trade right in there. Another one there, and there, and there, and there. Actually, this one was not because it didn't have any divergence. Right there, and right there. Nope, sorry. That one cycle's going down too steep. It's in the middle of a cycle reset right now. Okay. But there was a pretty good opportunity after the break, or during the break, in crude oil. All right, on the NQ, that's where we did the majority of our trades today. And the NQ's been running here during the break, which is good. We want to see the NQ run. We want to see the ES run, really. That's what we really want to see move up. We got to get it up inside the weekly trading zones. That's what we need to see. Okay, so our first trade here on the NQ, we stopped out minus 16 ticks. Missed a trade there, break even there. 4 ticks there to put us at minus 8. 4 ticks there to put us at minus 4. Then 8 ticks here to put us at plus 4. Then 1 break even trade. Now during the break it bottomed out right down here. Okay, you can see there were no more trading opportunities. Actually, there was one more trading opportunity, one more short right there during the break. But then the thing just took off, and long trade there, there. Cycle needs to reset. Then another long trade right in here. And cycle's resetting again. And there was missed a trade there. Right here, we missed a trade. We took a break-even trade there. And let's see, another break-even trade there. That was it. Now let's see during the break what we had. During the break, we had a trade there, there, and here, and a short trade there. And that was it. That's all we had. Okay. So there was a ton of opportunity today. Mostly during the break. During the live trading room, the markets were just a mess. It was tough. It really was. What I was showing you, what I was trying to show everybody during the live trading room was how things just got sideways. And it felt like this period right here where it was sideways took forever. Then it made a run up and a run down, then sideways. And it started out with just periods of this right here. Sideways, run up, sideways, run down, sideways, run up, run down, pass a little bit farther up, then sideways. But if you look at the area where it keeps sticking, it's right there. Okay. Now where is it right now? Right inside that area. Okay. I think if we break up above this area, we'll probably get up toward the lowest weekly trading zone. Okay, which is up at 89, I think. If we look at this on the hourly, you see this huge wick down here at the bottom? I think, yeah, that's the last hourly candle. If we can get up above this level right here, then it's possible we could get all the way up here. Okay, it got all the way down there last night. Just a couple hours. So, I know, wishful thinking, but it could happen. All right, so that is where we stand. All right, now if you have not taken, no, Bob, that's not going to work. If you have not taken a free trial with us, go to the homepage here at CFRN.net. In the right-hand column where it says register for a free trial, put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, you must click on the confirmation link. All right. Now, on the day, today we were up 23 ticks on the Russell, down 6 on crude, down 16 on gold, and plus 4 on the NQ. On the month, we are now at $1,325 a contract. That's over 5 trading days, and we're averaging $265 a day. Same thing for the year. Okay. Last year, Our daily average for the whole year last year, over 243 trading days, was $263 a day. So you see we're right in that range. All right. That is that. And with that, I'm going to stop the recording, and we can head back out to Phoenix. Excuse me. All right, Phoenix, if you are present, you can have the charts back. Okay.
Yeah, I'm right here. I'll grab them just a second.
Okay.
Okay, and okay.
All right.
Nope.
Not okay.
Well, you can't.
You do have the
There they
charts.
go.
There you go.
Yeah. Okay. Now you can see them, right? Yeah. It's like they
I
hung up for a
can see
minute.
them. Yep.
Okay.
Yep.
Very good.
I can see them.
Okay.
It is okay now.
All right. Strike again. Okay. Failed to pay my 45% tariff. All right. We're going to go to our good word for the day, and then we'll take a look at some Concierge Trade Alerts. Whatever we have time to look at. Pre-David, and then post-David, we'll take a look at the rest of them. All right. We've talked the first couple of... And what was the recap of the recap? I know it was one trade. How long? 5 minutes?
It was actually 3 trades. 5 minutes, three trades.
5 minutes. Okay.
Yep.
Now, guys, it's not a race. When you're trading from your home, your office, Central Park, wherever it is that you're putting on and taking off your trades, it isn't a rush to see how quickly you can get there. If you're not comfortable trading off the open when the markets are sort of chaotic, Michael doesn't have a problem with that. But if you like a calmer market, you can wait until about quarter till. This is if you're trading the day session. Many of the partners go in pre-market and get their points. That's an option too. You can see how markets have traded all night. You can see where they're headed into the open. You remember, we're always drawing legs in one direction or another. Sometimes that can be a real good barometer. Where did we open at London? And now we're 30 minutes away from Wall Street. It's usually pretty apparent which way the market is trending. Remember, leg, retrace, leg, retrace. If you can get one more leg, right, that will usually give you your points for the day. Just saying. So if you want to avoid the chaos of the Wall Street Open, you can wait till quarter till. But then you got to start being concerned about a phenomena that happens from 10 minutes till the top of the hour till 10 minutes after, when the market makes this swing in the other direction. It is often tied into economic news that is released at 10 a.m. Eastern, but we often see the phenomena on days when there is no economic news released. It's just a period where the market seems to kind of make up its mind where it wants to spend the majority of the morning up until lunchtime building legs. So you watch the market you trade and see if you find that to be true or not. Okay, now on our good word for the day, we've been talking the last couple days since the beginning of the new year about fear. And we've talked about doing something about it. Yesterday, we talked about praying about it. Now, yesterday, pray about it. Today, back to doing something, because God values what you do. Hebrews 6:10 says, God will not forget your work and the love you have shown him as you have helped his people and continue to help them. You see, God really doesn't need anything from you per se. He doesn't need a bottle of wine, a box of chocolates, or a foot massage. It says here, Hebrews 6:10, God is not unjust. He will not forget your work and the love you have shown him by helping his people and continuing to help them. So, if you want to please God, right there. It's not about what you do for him. It's about what you do for his people. It's about what you also do for the least of these, as Jesus spoke. Now, the enemy is going to try to convince you that you don't count for much in God's kingdom because you don't have a high-profile gift like preaching or teaching or leading, in public anyway. But nothing could be further from the truth. It clearly says in Hebrews 6:10 that God will not forget your work and the love you have shown as you have helped his people. God sees you working behind the scenes, day in and day out. There's a saying that character is what you do when nobody else is looking. Think about that. God sees you working behind the scenes, day in and day out, caring for an elderly loved one, raising your children, encouraging others, contributing whenever, wherever, and however you can. And I'm not talking about money. Our contributions go so much further than the dollar. Will Rogers said this, we can't all be heroes. Somebody has to sit on the curb and clap as they go by. When you think you're too small to do big things, try doing small things with a big heart. You never know what you can do until you try. James Sizu said, glamour isn't greatness, applause isn't fame, and prominence isn't eminence. The man of the hour isn't apt to be the man of the ages. A stone may sparkle, but that doesn't make it. People may have money, but that doesn't make them a success. It's the seemingly unimportant people who determine the course of history. The greatest forces in the universe are never spectacular. Summer showers do more good than hurricanes, but they don't get a lot of publicity, do they? The world would soon die, but for the fidelity, loyalty, creativity, and commitment of those whose names are unhonored and unsung. Today, God values what you do. Don't get discouraged and give up, for you will reap a harvest of blessing at the appropriate time. Galatians 6:9, and let us not grow weary in well-doing, for in due season we shall reap if we do not lose heart. Some translations say grow weary and faint. In the 70s, they said keep on trucking. All right? That's our good word for the day. All right. We've talked about the S&P 500. We've talked about the fact that we got diddly squat. I don't think that's profanity. I think that's just diddly squat. We didn't get much of a bounce off of the 50% retracement. Got a little. I mean, let's face it, we got more than a little. From 71 up to 85. And quite frankly, we could have bounced higher. I'd have to go into a smaller time frame because this thing could have bounced all the way up to the top and then closed down on the day. But we can look at that later in the show. We'll take a close look at the S&P chart. But look at this move down to the 62% retracement. Okay? Now that leaves a whole lot of space between here and here. We're talking about potentially 70 points. Okay? And then if that doesn't hold, okay, does that mean the world's over? No. All we're looking at here is a swing low that was put in August to a swing high that was put in November. That's just a little tiny glimpse of the greater picture. Okay? Look at this low way back here. See? All right. All right, let's take a look at what do we got? How much time we got? We got 3 minutes. Okay, I can work with that. Let me find my chart. Let me find my chart. Oh, here it is over here. All right, the Dow. Okay. Because we already talked about the S&P. And I didn't even put a short trade out last night. As I said in that comment this morning, it was sort of like shooting fish in a barrel. But I'm going to leave that long trade on triggers. And it's, for anybody that wants to know, it's at 73. And if you're a partner, you've got the stop, you got the first target, the second target, and the third target. Now, if this 62 chooses not to hold, then we'll get some new lower entries to be long. But the markets won't fall forever. Okay? Now, you can continue to short them as long as they fall, but when they bounce, and they will bounce because they always bounce, when they do bounce, there will be some nice moves to the upside. Doesn't mean we won't continue lower, but there will be some trades on the upside. So, with that said, this was the Dow last night. And on the Concierge Trade Alert for the YM, we said to be long above 650 or short below 490. Okay? If you got long above 650, put in a swing high at 666. So that's points. How many points does it take with the Dow? You need 20 at $5 a point. Over here on the short side for the Dow, it was short below 16,490. Okay, and we bump it down that one tick, see, to 89, because you're going to be short below 490. And so from 89, we dropped in that first hour, we dropped down to 62. 62. So what did that give us? A 27-point drop. Okay. Followed up by a drop to 55. Let's see, this one dropped to 62. This one dropped to 55. So an additional 7 points in this drop. Okay. And then this morning, Wall Street open. Now, the important price, important area is always tested. I mean, we're seeing it here. We're seeing it here. Then we saw it again here. This move in this hour took us from the trigger, which was at 490, took us to a swing low of 421. Okay. So that's a 70-point move. You need 20 to be done for the day. That was 70. Okay. Now you can set, as you know, your hard target at 20 and then walk away, be done for the day. If you're trading multiple contracts, you can trail the balance at whatever distance you're comfortable with. Okay, whether you're trailing on an hourly chart using the BBC or maybe on a 15-minute chart using the CFMA1, however you've chosen to do it, you may get taken out on this candle or this candle because we dropped all the way to 42. So from 490 to 342, that's roughly 150 points. Again, the Dow only pays $5 a point, but again, you only need 20 points to be done for the day. Now, because these moves took place during regular trading hours, there's sufficient volume here in the Dow to, trade a substantial number of contracts. Certain markets like the Russell, the Dow, you have to be very cautious trading those on the overnight session, even off the London Open. Some mornings on the London Open, the Russell will have no spread. There will be sufficient volume, sufficient liquidity to cover you trading 10, 20, 30 contracts. But a lot of days it doesn't. So you're better off, if you're going to trade the Russell, wait for the Wall Street Open. Now, you don't have to trade in that chaotic period. You can wait for things to calm down. Like this hour here, the 11 o'clock hour, okay? If we throw some volume in there, it's not huge volume like we see in the S&P, but in this hour, we had 35,000 contracts. In this hour, 37,000. And in the Wall Street opening hour, we had 40,000. So, but go down here to the London Open. You had 8,000 on the London Open. Man, if you're trading 10, 20, 30, you're okay there. Every day that you see that. But more and more often, here's what we do see. What we see is that London Open is becoming more and more meaningful. When we first started looking at Globex a number of years ago, I think shadow market was the term used. It's coming into its own. It really is. All right, it's time to go to Vegas. Stand by. We'll be right back with David from PageTrader.com.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out no obligation information kit absolutely free. 866-928-3310.
Thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too. Oh, I love you.
Good morning, Dwayne.
Hey, David. Good morning. Happy Friday.
Thank you very much. It is a happy Friday. Glad to be here.
Show.
Hope everyone's having. Thank you. Hope everyone's having a nice day. Hope everyone had a nice week as well. Big markets, and probably because it is the presidential year, the year 2016, we're probably going to see quite a bit of volatility this year. There's a lot of forces at work, so should be a very good year for trading if you're considering really diving in.
This has been, without a doubt, one of the best opening weeks for the year for us. I don't know, maybe since we began. I have to go back and check, but it's just been incredible. The opportunities just, it's been multi-directional in some markets. It's been more directional in other markets. But the fact is, as long as the river's flowing, it's much different than the world of equities. If the river's flowing, as a futures trader, you should be happy, okay? Unless you've got some kind of a thing where you can only go long or you can only go short. Please, if you have that, talk to somebody about it. Maybe it doesn't have to be that way. Maybe you can be more flexible. I don't know. So, David, what would you like to talk about? Anything in particular?
Well,
Want to jump right into the markets? How you want to do it?
any way you'd like. I will make a little comment. I did watch President Obama last night on the town hall for, people have been expressing a lot of concern about the gun issue because he's trying to change the gun laws.
Mm-hmm.
And to listen to him, for the most part, he sounded pretty reasonable. Listen, we try to make cars safer, we try to make everything safer, and we're trying to make, we're just trying to make sure that people don't, hurt themselves unnecessarily or hurt others and so on. But since I so vehemently distrust this administration and everything they do is so politicized, it's all political chess to them, it's very difficult to believe, and I think many people feel the same way. During his speech, he did bring up, he says now it's a matter of debate whether or not, after explaining that this is just some common sense rules for guns and so on, he kind of gave away his game. Mm-hmm. He to a rape victim, he said, well, it is a matter of debate, and we should debate this later. We'll debate this later, whether or not a rape victim who has a gun on her, if that gun isn't more a danger to her, then the guy could get the gun from her. Or he further said, we'll have that debate about whether a homeowner with a gun is really safer with that gun than when somebody breaks into his house. It's like, Mr. Obama, you just gave away what your next step is in this program. You're going to do something authentically reasonable up front, then you're going to step up the game, not in his administration, but if it continues on through another administration, the next one's going to be, well, actually we have the stats here, and, X number of rape victims, the gun gets taken away. That's where they're going to go. And they also want you to federally register your gun with them. And that means that the government knows that you have the gun and they can demand it from you later. They don't know that you have the gun right now necessarily. So anyway, this is all just a big political thing to get the door open for later, further gun control. That's what I believe it is.
Yeah.
There's
You're
many
right.
good, reasonable things you can do, but when unreasonable and bad intended people are putting those reasonable regulations out, it leaves us, I don't want a rape victim to be told by the government, or a person who is going to be raped, that you won't get the first chance to shoot at your accuser or your rapist because we have found that statistically that gun will be used against you. So we're helping you out, Mrs. Later to be in a horrible crime person. We're helping you out by taking the gun away because then the gun could be used against you. I think the average person wants to know that he has the first shot without the government coming in. He has the first shot at whoever his, whatever crime is being used against him. And but that's where they're headed. Federal registration of guns. This is the first step, and then federal registration of guns. Then they know you have them. Then they can come take them if they want to. It's just, if you keep telling us stories that don't turn out to be true, we don't trust you, and therefore we don't trust you with something that's as important as the Second Amendment. We don't want you to start making in the Second Amendment when we already don't trust you. And Democrats, listen, he had the House and the Senate at one point, I believe, and he couldn't get his gun control passed then. He couldn't get it passed with him having the Democrats having control of the House and the Senate when they did. So clearly there's some objections to this that go to, do his political thing here. So it was interesting. I thought he handled himself very well during it. I think he answered questions very well, but he did give away what the next step is. We're going to have that debate about whether or not, a rapist, is really in danger from a person who they're raping with a gun, and whether that person should have a gun. Really? No, I don't think we're going to have that debate. That's not up for debate. My daughter's going to carry a gun. She's an attractive girl, and she's going to pull it out and she's going to shoot a person who's trying to rape her. She wants that opportunity. She's not going to have it taken away through debate with you, Mr. Obama, or your cronies. So the gun control thing is a very emotional issue for people. This is why, and they say this on TV, President Obama is the greatest seller of guns in the history of guns. He comes out and says what he wants to do, and people just rush. And those stocks are up like 900%. The individual stocks for these guns. They're just incredible gains they've made. And I just don't think he's going to be successful with further rules, because all they do is impinge on decent people. I think at this point we have more people own guns now, they said this last night, than at any time in previous American history. And at present, we have the lowest murder rate using guns. Even though there's horrible things that happen with guns, we have the lowest overall murder rate in the United States right now that we've ever had, and we have the most people owning guns. People are reasonable. 99.9% of people do not want to go out and shoot somebody else with their gun. These are or drug people that are doing that. But just it's so this administration to mess with the 99.9% that are doing the right thing in order to fix the 1%. Why don't you go after the people that are the drug users and the criminals? Go after them rather than changing a perfectly good thing for 99% of the people. Why don't you fix the insurance so that people can have their pre-existing conditions and all that stuff, rather than, since 98% of the people were happy with their insurance and the only 2% weren't, and those are the facts, why do you rip it all up for the 98% so you can fix the 2%? That's what he's trying to do again here with guns. He wants to wreck it for the 99% so that he can fix it for the 1%. And that's his whole modus operandi to changing America. I do not trust Barack Obama at all. I believe he has bad intentions for the United States of America. If he could have done more equals worse, he would have. He's done as much as he possibly can. And I'm sorry if that's offensive to people, but he has lost, even on the left, he's lost the trust of people with over and over again his claims of what he's going to do, and then he turns around and says that's not, or I'm not going to do that. On and on and on. His defense of the defenseless, things that have happened in his administration, he just has lost all of mine and many, many other people's trust. So we certainly don't want that person coming up with a brand new plan to encroach on constitutional rights that you had through the Constitution, not through legislation. And he is a constitutional scholar, and he spends a great deal of his time writing executive orders to try to get around, guess what, the Constitution. And he's been rebuffed like 11 or 12 times, something like that, from various higher courts saying you can't do that. They keep coming back, and he keeps taking the next shot. So, good riddance. Mr. Obama, please, go golf, go give your soaring speeches to someone else. America needs an American president to take this country and bring it back to greatness, whoever that is. But it needs somebody else to do that, because this is one of the most perverse presidencies I've ever seen in my life. And it just doesn't end, and it's not going to end until he's out. There you are. I feel better now. Going to take some of my medication, got that out, feeling a little more clear-headed now. I'm ready to talk about markets.
Okay.
So
sounds good.
Anyway, it was interesting. If you get a
S&P.
chance, if you do get a chance, you can check that out on YouTube and type in I forgot what it was called, but it's a national town hall meeting essentially on the gun control issue. And it was done by CNN, and they, it wasn't all a bunch of planted people. These were people who, some of these people were asking some pretty stiff questions, including the announcer. So I give them that credit, because they're not so happy with him anymore either, I don't think. All right.
Right.
I'm ready to go now.
Okay. Want to go to the S&P?
Sure. Well, I'll tell you, we've had a heck of a week in the S&P. The market is continuing to confirm so many of the things that we've talked about, with the yearly top and the monthly top and all these tops inside of tops that have happened based on a reflected wave. And all of those tops were strong enough to push through our recent daily bottom that we had indicated, which was back on the 4th of January. And they just bounced a very little bit and just pushed right through it. And that is a very good sign that larger forces are at work now, and the market is starting to begin to express those forces. So very important condition that happened this week in the daily bottom. Now we didn't lose a penny on that daily bottom because we never got an indication to go long from that bottom in the way that we trade. But we did have many indications for short positions leading all the way up till yesterday. And as we get into today's session, the market has shown at this point pretty weak behavior given the fact, given some facts that I won't go into all the details, but just given some facts, they've shown some pretty weak behavior today. We did make a new low today in the S&P. That's important. And we also are not able to get underway on the long side as yet in terms of the market really rallying. So we've been inside a decent range, but it's kind of, the volatility has been so big that today is kind of a quiet session, if you will. So next week is the next important weekly bottom that we're looking for, and unless the market breaks substantially further, and by the way, we wouldn't necessarily be looking for that bottom to occur on the on-time week. If these larger forces are starting to push lower, it's possible we would see that in a one-week scenario. We're not forecasting that, but we're simply saying that, once the market starts to show the signs of a larger force at work, then, we want to be careful, and certainly we want to follow our own rules for buying the market in a potential downtrend. So next week is going to be very important. We think, any day and any week at this point is important in the S&P, but with regard to that weekly bottom, we're thinking it's pretty important at this point, next week. So,
yeah, last night, right here, when China opened, their markets rallied higher, and they closed up
sure,
positive on the day. I mean, they've had a very rough week. Let's see which one it was. The Shanghai. Yeah, the Shanghai had 2 days this week. It was down 7% on 2 different days. It managed to close up 2% today. But last night, this was the U.S. futures market reaction to the China Open and the China rally. But after the first hour, it kind of began to falter. And then by the time we got over to the London Open, London should have picked up the ball here and ran with it, one would think, but it didn't happen. And then we got our jobs number this morning, which, according to the headlines, crushed it. But here we sit. So, that's the story of the S&P.
Well, the job numbers were very good today. The non-farm payroll.
That's why the headlines were saying, the
job.
jobs number crushed it. That's what they meant. That's what they mean by that. Yeah.
Mm-hmm.
So
that's interesting.
Yeah, that's what I'm saying. We had, according to the jobs report itself, was good, but the market sold off.
Mm-hmm.
So the old thing about, well, if we get good news, the market will rally, not necessarily so in this day and time.
Mm-hmm. Well, the market has rallied on bad news for the last 6.5 years,
exactly.
7 years. So.
Exactly. Yep, that's my point. Okay, let me find the chat box and see if there's any questions in there. Okay. Scrolling through comments. See if there's any market questions. Oh, please. Okay, Ed, we'll get to beans in just a second. Trying to see if there's anything on the S&P. No, I guess we'll just go to the bean question. We'll just go to the bean question. Please ask David if he has a weekly or larger bottom due in beans. Thanks.
Let's take a look at beans together. Let me get over there. Give me just a moment here. I got to click through a few. Okay, so the soybean market, relatively speaking, it's mild. It's not something that's really we're of action in it. We are seeing some movement. I'm not sure that I can tell you just at this moment. Let me see if we have a... No, I'm not showing a weekly bottom, but I will say that the soybean market has been trading well above a number which is $8.57, which we think, these continued weekly or daily or 3-day or whatever chart you want to use, we firmed up on 57, and we like that number. And so the market may indeed be preparing for a larger advance here. We haven't traded in the soybeans in a while, but we did have a trade this week where we were looking for soybeans. I think it was just a 5 or 6 cent move. We were forecasting that they would get up to 870 to 871, and today we did get up to 871. Okay, so today's high is 871, and they're trading like a market that doesn't have a lot of steam in it right now, but that's just on the shorter term. As long as we're above 857, I think we still may see higher prices later in soybeans. We're still flat at this point with the trade having completed, but we're interested at this point. So next week, I think, will be a better time to ask that question. But keep that number in mind, because that's a number that's important to us at this point. So
okay. Hang on one second. Let me see what
and I
else
would,
is
if
in
there aren't market questions, I would be curious to hear some of the other people's impression, if whatever they were commenting on, if it was the gun or other issue.
Yeah. Okay.
If you want to.
Yeah, I'll cover them. James offers, Patrick, I just sent you a message. Patrick is new with us. Patrick, we talk a little bit about world events here. We talk a little bit about politics. We talk about whatever's going on in the world. Our training is concentrated in the live trading room during the first 2 hours of the market, 9:30 to 11:30. So you're not coming here to the radio show to necessarily learn about how we trade, although I will finish recapping the Concierge Trade Alerts from last night with you after we chat with David. We chat with him each day for 45 minutes. So we'll get back on track with that. So just hang tight. James says, not fully vetted, but it seems that only 3% of violent crimes are committed by legal gun owners. Well, Chicago is probably the single best study in what strict gun control turns into. There's more murders with a gun every weekend in the city of Chicago than the rest of the United States put together. I mean, the proof's in the pudding on that one. And an armed society is a polite society. If you don't know whether or not the guy next to you is armed, you're probably going to behave, probably going to be polite. And that's just the bottom line. Casey says, I and many others I talked to are now convinced that all our government is interested in are control and taxes. And all their actions in retrospect fall into these two categories. Okay, so the control and taxes. Yeah, that pretty much sums up the government since its inception, I think. Let's see. What else did we have? President Obama said the NRA would not come to debate with him after multiple requests, but the NRA said they were offered to ask one pre-screened question, so they denied. That's from Tim. Thanks, Tim.
Mm-hmm.
I had not heard that. James, of course, James, you make a great argument here, and I've heard this so many times. President Obama should set an example by not allowing his Secret Service to carry a weapon or to not guard him at all. He can handle any problems by himself. Mm-hmm. See, that's where the whole argument falls apart. So, I'm sorry. From John W. Future headline, Social Security payments suspended. Where did that go? Future headline, Social Security payments suspended for those who fail to turn in guns.
Right. There you are. Well said. It's the iron fist and the velvet glove, and they're just going to walk us down. They did it with Obamacare. They're going to do it. They're going to do it again. Now, right now, they're not saying we want to take your guns away. Right now, they're saying we just want common sense rules, for guns, and it sounds pretty reasonable. And as I said before, he handled himself, I thought, very well last night. But he did give away that there should be a debate about whether or not a rapist can really, or a person that has a rape crime, can really use a gun against somebody like that. Why should there be a debate about that? Or why should there be a debate about whether a homeowner, that's just a means of getting an argument started and a discussion started about taking those guns away.
The better argument is at the age of 18, every American citizen will be armed and taught how to use the weapon properly. There you go.
Yeah. So
now, the president says, this is from Burwell. Good morning, Burwell, or good afternoon.
Morning, Burwell.
President says he thinks we should debate the gun issue. However, the same president says that the debate regarding climate control, his pet project, is over. I don't remember such a debate having taken place. Now, Congress did vote this week to repeal Obamacare. Of course, the president has already said that when it hits his desk, he will veto it. However, we got an election coming up, folks. And there's a lot of strong talk that there are going to be criminal charges brought against Hillary. I know a lot of us find that hard to believe, that there could be a crack in the foundation of Hillary. But if that is the case, then if she is forced out of the race because of crimes committed in Benghazi, on Wall Street, and other places, in her own home, in her living room, or closet, or basement, or wherever she had her mail server, if she's forced to face these crimes, she won't be able to run for president. And so, pressure your congressman to keep the pressure on, okay? If she's brought up on charges, she can't run. And she's really the only threat to a Republican taking the Oval Office in the general election. So, let's see. Drug crime rate with meth and stuff. Do not give up guns. Okay, rapists have guns too. I'm not able to see your chart. That, Mario. I think everybody else can. Maybe that goes back to when Michael was on, but we could see his. So hopefully you got that. Okay, I got some market questions here. Let's see. From Ed W. David, have you got a weekly top in gold? And do you have any forecasted bottoms in crude? That question sounds vaguely familiar, but we'll look at it again.
We are expecting a weekly top, but we do not have one, meaning that the market has not indicated for us, utilizing reflected wave, that we would be expecting a weekly top. But I do want to tell you regarding gold, because gold is, we had forecast on your program that gold was going to have a rally and a sizable one. We didn't give out the targets because that's for our subscribers, but this was, last week and early this week I've mentioned it. But what we believe right now, just to give you a little bit of hints about what's happening, normally gold is going to attempt to go sideways to lower into Tuesday, plus or minus a day. Barring if this advance is really frothy, they could get out of doing that. But if it's just a relatively normal advance, which is what we're forecasting, we would see at least a slight new low below today's low, an attempt at that anyway, into Monday or into Tuesday, plus or minus a day. So I don't want to give the price level of that low because that's part of the subscription, but I want to say that that is what we are expecting. And we made that very clear today when gold was trading up at 1105 basis, and that once that happens, we're going to be interested in buying the market for a completion of the larger forecast up move that we've been talking about in gold. So I hope that's useful. All of the in whole, if at pagetrader.com, you can come out and take a trial and get all that information if you'd like to see it. Dwayne, I have a couple charts I can show as well, and I'll do that. And this may bring a few other questions up because there's a few interesting ones here, if you will.
Yeah, hang on one second. There you go.
Okay. Many S&P trades this week, and we can start with this over here on the left. This was yesterday, Thursday, January 7th. We instructed all of our Williams Edge S&P members to short the S&P at 1965 to 1966 for a decline to 1951 and then 1938 to 1936. This is the entry point. The swing high on the day was 1969. We did decline to 1950 to 51 right here. This was a partial exit point, and then we did, of course, get down all the way down to 1932, which is about where we're a little above that right now. So this is a 28 to 30 point intraday, not overnight, but intraday move. This is one of the larger intraday moves that we've been able to catch. I mean, literally trade it, not an after-the-fact review of it and what we would have or could have done under a set of different kinds of trading rules, but this is what we actually did trade. And I mean, reasonably speaking, it was about a 28-point move. We were very happy to have that. It seemed very obvious yesterday that the market was not going to be able to sustain further advance and was, in fact, going to just drift lower later in the day, and that was our exact forecast along with these price targets. In the middle here, well, actually, I'll just go behind this. I'll go to the middle. This was our soybean trade that I mentioned to you earlier. For the move up to 860. Actually, we got out at 868 and a half on the long side. This was just a small trade, about an 7 cent move trade. Over here was the euro on Wednesday. We indicated that you could buy the euro if we had an hourly or daily close above 107.40 for an advance to 108.40 or higher. And it's gone much higher than 108.40. We're at 109.12, but I'm not taking any credit for that at this point. I'm just saying that we did buy it at 107.60 or as high as 108 on the daily close, and we did get up to here's your 108.40 with the swing high of 108.47. They did turn around and did move higher after that. So they had euro had a really nice move. A couple others here, not too many here, but this was a S&P decline back on Thursday yesterday. Right after the market opened, we forecast that the market would decline from 1957 to 1951. These are explicit targets being given out in advance, and the market did decline straight down, as you can see, to 1951.25. Or this was a up move on Wednesday, hourly close above 1980 will advance to 1988 into early tomorrow. The whole move happened right into the end of the day, so it came sort of 1 hour early. This is just a 5-minute chart. We got up to 1987.50 on that. Over here, we had, again, S&P. Hourly close above 1980 on Wednesday, 2 days ago. We'll test 1989.90 and then 1993 to 94. So we're starting from here. This is where price was. We got our 1990 right here, 89.90. They got to 91.75. They pulled back, and then they ran up to the second. This is a two-step roadmap up to 1995.50, which completes the 1994 upside target. Again, these are explicit targets. These are targets that we are laying out in advance as numbers that will be reached in that period of time. And here we had early on Tuesday, we had this trade. We didn't have a target for this. We just bought the market, and we took some off at 20.07, and then we did get stopped out slightly below. We don't rush our stops up to break even, so this was a little below break even, and the whether that was a break even or a slight gain or whatever it was, that's what it was. And then that was a soybean trade there. Then over here, a couple others, and then I'll be done. This was a decline on Wednesday. I mean, a lot of S&P. Hourly close below 78 will decline to 71/69. This is where they were, and they got down to 70.50 before closing. And a couple others. Tuesday, January 5th, any hourly close below 1993 is a sell the silly thing short entry for decline to a new recent lows below 1980. So instead of forecasting a specific price target, we were saying that the market was at least going to go to 80, and it's going to make new recent lows below 1980. And this is where they closed the hour below 1993. They closed it here at 1988.50. They did indeed bounce here up to 1997, and then sold straight off, broke 1980, made new lows below 1980, and there you are. And then one more I think we have here. This was the S&P on Tuesday. S&P is about to advance to 2006 to 2007 or higher. Current price was 2001. This was partial exits were taken here. And we are taking credit for this because we did stay actually with the trade, and we booked profits at 2013, and that was the remainder of the trade there. So this was a nice, the week had a lot of very, very active trading in it. And oh yeah, this goes back to last week here. So that's everything that we have. If you are interested and want to see some of these trades or take them yourselves, you can come to pagetrader.com and sign up where we give the information out. We make it very simple. We tell you where the market is going to firm up on, we tell you where it's going to go to, and we tell you when it's going to get there, and we manage the trade all the way through to that target. We don't have any secondary systems or second sets of rules or anything like that. We just have a single thing that we're doing. Here's where the market is now, here's where it's going, and here's when it's going to get there. You can buy when this happens, take some here, take some off here, and we'll see you at the target, that kind of thing. If you're interested in that, give us a call come over to pagetrader.com and check it out. Wayne, I'll hand these back to you now. There we are.
Okay, let's see if we have any questions. Tim asked, yesterday Ed spoke of oil going to 32, which it did, and possibly 29. David, do you see anything? Do you see it going that low? Or can you measure the biblical move?
The biblical move is still underway, but all I can tell you is that the completion of 32, and that we didn't put that in this week's trades, but we did have a forecast for a move down to 32. It was about $1.50 lower from where we were at the time. They've completed 32. Today's low is 32.10. I don't have anything immediate new for the crude oil market. It appears to be a race to the bottom, and some of the people, perhaps like Burwell and others, that have more fundamental understanding of what is happening in the world crude markets with the suppliers like Saudi Arabia and so on, it just looks like a race to the bottom. I don't have a new forecast, though, at this point for the crude oil market, and I will tell you this, that we're sitting on a daily reflected wave bottom as of yesterday. So that decline to 32, that fulfills what we've said so many times on the program, which is that important turning points occur at important prices. And so the important price was our target of 32. The market bottomed and completed that target on the 1 day late low of the reflected wave. So at this point, based on that, we would be looking for a bounce in crude, but until I do some other analysis and so on, I'm not ready to just buy it just yet. So, so there you are.
Okay, let's see what else we got. Let's see. You covered Crude and Patrick asked, those were all winners. Did David have any losers?
This week we had no losers. We had all winning trades, except for the where we bought the market without a price target, but we just knew a rally was coming. That was the one where we said on Tuesday, January 5th, 9:12 CST, 2001 to 2000 even is buying territory in today's session. We bought it up to 2007. Depending on where you got in on that, you might have been long from 2002, so about 5 points, and then we got stopped out of the trade at around 1999. So you gained 4 or 5 and you lost 2 there. So we don't trade as often as maybe perhaps others do. We're not looking to trade many times in a day. I think there's it's hard to trade correctly time after time after time after time. You really have to do your homework to get it right. And we try to just wait for the probabilities to be in our favor as much as we possibly. We're not always right. We certainly do occasionally get it wrong, and we try to manage that with real stops in the market and so on. Now, if I'm mistaken, I don't think I'm mistaken, but I think we just had a banner week this week. We killed it in the S&P this week. I mean, we had 80-point gains and stuff like that in the S&P from big swings intraday. And I'm telling everyone that this is what I think is going to continue for 2016, the election year, thanks, and all that. And I know you guys did well as well this week.
When the markets as long as they're moving, that's all you need is some movement.
Yeah.
Chuck wants to know if you got anything on natural gas.
That is not my forte market. I still watch that market out of when I need to feel like I'm not worth anything, I watch natural gas. Because it's one of the things that I've described about natural gas is it's a fantastic market. It moves really big and really it's vicious, and you want to be in on that on the right side. But I've noticed that when that market gives indications, there's often for me unaccountable delays in the market completing numbers that we're looking for. So in other words, since we don't know exactly when the market's going to complete numbers or even generally, if there's that delay in there, in real trading, not after the fact, showing, but in actual trading, it makes it quite difficult to just be holding and holding and holding until the wave that we are theoretically expecting comes. And so that's the problem that I've had with natural gas. There's something different about that market that I'm not able to identify, and there's another market like that, which is silver. So both natural gas and silver, and even, although I think I can identify it in coffee, coffee is another market that you don't see us trading in. That's a very slippery, beautiful, beautiful market. But I've had trouble with it. Not with squares and things like that, but with really just doing a full-on forecast for that market. I've had some trouble with it. It'll go do the number, but the way that it does it and the manner and the things it does before it goes there are difficult for me to manage. So, we want to we don't want to just forecast. We want to actually be able to trade what is actually, about to happen. So, anyway, I'd like to wish everybody a great weekend. This is the first week of the new year of 2016. It should be a wonderful, hopefully, it's going to be a wonderful year in trading. Dwayne, thanks for having me on. I'll see all of you next week, and we'll be back, and I'll see you then.
David, have an awesome weekend, and
thanks very much,
see you Monday.
Thanks again.
Right.
See you then.
Bye-bye. Okay. Let's see. Crude oil. All right. Last night in crude oil, we had 2 opportunities available to us in crude oil. Long above 34.40. Okay. Which we didn't get there. So we didn't have to worry about the long side. The short side is 33. Okay. Now, here's 33.10. Now, I want you to remember that important prices and important areas are almost always tested. Those of you that are new to the show, it'll take a while, but pretty soon you'll go, dang, does that guy have to say that every day? I kind of do, because there's always somebody new in the audience, and it's always important that they understand that once you identify a key area in the market, that so this was 33.10. Price drops to a swing low of 32. $32.95. So from $33.10 to $32.95. So that's 15 cents. Crude oil pays $10 a tick, so that's a $150 move. If you've graduated, if you're trading the 2420 blueprint, if you've worked your way up to 10 contracts at this point, and that takes a year, see? That seems like an eternity for a day trader, but it's really not. Time goes by pretty quickly, especially when things are going well for you. So that's a $1,500 drop for the person that's graduated to that level, with the exception of the fact that nobody gets out at the swing low or the exact swing high. Okay? Fibbers do, but I'm not talking Fibonacci. Now, we get this drop and we go down to $32.95. It's a $150 per contract drop. What happens? Price gets back above the trigger, okay, and then down we go again. This time taking us to $32.70. So that's a 40-cent move, or $400 per contract. Or if you're trading 10, well, you can do the math. Then what does price do? Obsessive compulsive kind of thing. It gets back above the trigger again, and there we go. And then after we take this big run up, down we come again. This time we get to a low of $32.90, which is another 20-cent drop, or $200 per contract. Now, the most important thing that we try to convey, and today was a real good example in the live trading room, is once you reach, go embrace life. God created you for something greater than to sit and stare at the screens all day. Okay? I find that the more time people spend in front of the screens, the less productive they tend to be. Now, let's take a look at, let's see the Russell. What happened to Russell last night? What's happening right now in the Russell? We had a 3.5 point move to the downside. That was the first move. It's $350 per contract. Now, this one here, okay, on the pullback, we got up to 1055.70. We missed touching the trigger by 3 ticks. It was a 7-point drop. The Russell pays $100 per point. There's 10 ticks to a point. The S&P pays $50 per point. There's 4 ticks to a point. The S&P pays $12.50 a tick. The Russell pays, oil pays 10 a tick. Gold pays 10 a tick. And so then, important prices, important areas, you got it. So we're back above the trigger, and then down we go, and down we go right now. We've dropped as low as 52. So that's 4 points, or $400 per contract. This level that we're at right now, we're at 53. We're at 53. What are we at? 53.7. We're roughly at about 3.5 right now. Okay. Now this is on an hourly chart. Okay. There's 2 ways. I have to explain this every day. If you're going to trade the Concierge Trade Alerts, number 1, learn how to trade first, okay? Get those 10 days together back to back where you make $100, 10 trades or less, 10 days in a row, just so that you fundamentally understand how the market works. If you're a partner and you missed last night's partners meeting, scroll through till you find the part where Michael breaks out the yellow highlighter. Okay? That will be so beneficial to you and any struggles that you've come up against. If you can kind of get that deep down in your spirit, write it on the tablet of your heart, you'll be okay. Now, here in this hourly candle, as price triggers, okay, where would our stop go? We covered this last night. I cover it just a little bit each day here as we go through the Concierge Trade Alerts. Okay, this is the dynamic structure of the market. Okay, here's our trigger. We're looking for lower prices, which we got. Okay, now if price moves back up above this area after triggering, well, obviously we were on the wrong side of that trade. The best trader on the planet is going to be profitable 7 out of 10 trades. That also means he's going to be unprofitable 3 out of 10 trades. Those 3 could come back to back. However, if you've read Trading in the Zone, you know Mark's belief is, and my belief, and most of the partners have come to the understanding that there's a random distribution of profitable and unprofitable trades. You don't know what order they're coming in. No one knows down. These trading men and their fabulous trading machines, just like the weatherman has his Doppler radar, we have our indicators, and we have a pretty good idea of what's going to happen next, but we don't know the future. And so where so many traders will get sidetracked and aggravated and frustrated. I spoke to someone today. He's been in a rut for a number of months, and he wants to break out of it. He can't understand what happened. He was doing well, and then all of a sudden, everything closed in on him. Okay? That's part of the value of being in a community where you have access to someone that you can talk to, because sometimes we get so close to the tree that we can't see the forest any longer. Now, the market, being fractal in nature, is always drawing legs in one direction or another. Well, we can see on this hourly chart, just going back to the 6th, 2 days ago, leg and a retracement, leg and a retracement, and then we got a deeper retracement. See, this transitionary period right here, now I'm showing it on a larger scale on an hourly chart, but this same type of transition will show up on a 1-minute chart. Okay? So now what are we doing? Well, we've put in a lower low. So, and is this a lower high? It is. Lower low, lower low, lower high, lower low. So we're still in a downtrend. It's pretty difficult for the market to literally turn on a dime. Now, the smaller the time frame you get into, the more it can appear that it's turning on a dime. So that's when you need to back a little bit of a bigger picture look. You see, on this hourly chart, us having the knowledge that 1056 is an area where the market should trade lower and then be attracted back to and trade lower and attracted back to and trade lower, which is exactly what we've seen. If we were looking at this on just a smaller time frame chart, tunnel vision or tick vision or range vision, whatever you want to call it, it's where you lose touch with the bigger picture, right? So as the market is leg, retrace, leg, retrace, were there not some potential long trades to the upside here and here? Yes. And is it not possible to take advantage of those? Yes. As long as you stay aware of what's happening in the bigger picture, and as long as you're aware of where that retracement is and at what point you see here, this is a good example. When we came from this swing high here to this swing low. Okay, from this high to this low. You've either got to look at the entire move or the last leg. If you just start picking out points in between, it's like a doji in a trend move. If you stare at this chart for a minute, what do we have to see now? Not after this. Here, let me get that out of the way so you can't even see. All right, that's there. So, leg, retrace, leg, retrace to the 62, and then we're transitioning along. So, how do we know if this downtrend is still intact or if we've started to build legs to the upside? Now, chart, but if you go to a 5-minute chart, the same principle applies. Or a 50-tick chart, which isn't a fib number, or a 112-tick chart, it doesn't matter. There's no secret time frame. I know we all want there to be, like, the 144-tick or any kind of a fib number, something, a GAN number. I'm sorry. The markets are fractal in nature. So you can use any time frame to trade any market as long as it's not so fast that you can't keep up with it. The larger the time frame, the more patience you'll need, the bigger the move. So I won't tie you up on a Friday afternoon, but as we're going through this transitionary period here, where we've gone from a high to a low and hit the 62% fib, we either have to see this high broken, which tells us, wow, we have bottomed, at least temporarily. And temporarily on an hourly chart's a whole lot different than temporarily on a 5-minute chart, right? 12 times different. Or we have to see what? You're way ahead of me. This low broken. As we move sideways, to know if we're going to build legs to the upside, this has to be taken out. If we're going to continue to build legs on the downside, this low has to be taken out. What happened? Who won? Sellers won because we put in a lower low. Then we put in a lower high. Question here now is, are we going to put in a lower? You see, this could be right here the very beginning of the market finding some kind of bottom, but it's much too early to tell. And so for now, the weight is on the side of the sellers. The sellers have the upper hand. As we go down to our smaller time frame charts, as we go to the range chart that we use in the live trading room, we know at any given moment who's in control. Now, big picture, on this hourly chart, no doubt about it, sellers are in control. The market now appears to be attempting to work its way back up to this. Question is will it be turned away once again? Now, if I bring up a, let me find this. Okay, let's take this and let's drop it to a 4-tick range. Okay. And let's change it to the Russell, which is just what we were looking at on the hourly chart. Okay. You see that right there is that right there. And this right here, see this red candle? That's this. All right. All right, let me get this chart. Let me get the indicators loaded on it for you. Because I want to show you this, and then we'll cover the rest of the markets real quick, and then I've got some mentoring sessions that I have to do. So give me just a second to fix this. Because I want you to see. You know what? I'm going to leave that. I'm going to leave it on for now. But let me do it in layers. Okay. Yeah, that'll work. All right. So this big move, the green candle that we're on right now, which the low of that candle's 1052. And the high of it's 1054. Okay. 1052, 1054. Now, as we retrace, as price pulls back to the BBC here, we know that 56 is an area that is a decisive area in the market. That's up here. And so on a pullback down to 1054, this is the Russell, so we really only need one. We only need to take 1 point out of this. Is there room on this pullback to get us our 1 point before this swing high? Yes. And before the big number, 56, yes. Also, is there a possibility that if we trail our stop, if we've graduated to multiple contracts, that we can take more than 1 point out of this trade? The answer is yes. So, for the weekend, let your homework be looking at multiple time frames. It's important that you not only be able to watch multiple time frames, but literally think in multiple time frames. So what happened here? We got a bullish cross, price pulled away, price pulled back. Is there so much momentum that it can't quite touch? Is that what's going on here? If so, there's a trend line. Okay. Yeah. And so an up close. Now, do we know where this will close? Yes. The low of this candle is 54.40. If every candle is 4 ticks tall, close above, see, we got to close below. You see that? We were looking for a close above. We got to close below. So now what do we got? Got to start over. Now, okay, you follow that? So now the question is, will the market be able to rally to this swing high up to the 56, and then will it get turned away again? Okay. If you'll just spend a little time pulling your charts up side by side, you'll be amazed at the insight that you'll get from. I've preached the hourly chart to you guys for so many years. Not that you necessarily want to trade off of it, okay? Although you can. But as a backdrop to what you're doing on the range chart, be very, very beneficial to you. Okay, bonds. Did we? I don't think we even looked at bonds yet. No, we didn't. Okay, so real quick here, before I have to go, let's take a look at the bonds. Last night, the word on bonds, long above 156.13, short below 54.22. $154.22. That's a number that we've had for a couple days. Okay, now that's way down here. $154.22, and the swing low was 13. Now that's 8 ticks at 31.25 per tick. So that's $240 per contract. If you're trading 10, that's $2,400. On the long side for bonds, 156.13. Okay, the swing high was 16. That's only 3 ticks. Okay, this would have resulted in a stop out for you unless you're trading with a larger stop than 8 ticks, which hopefully you've been able to pick up over this past week. The difference between trading off of the smaller 8 tick on the Concierge Trade Alerts or using the dynamic structure of the market. There's no right or wrong way. It's just 2 different ways. With the range chart, you limit your risk on each move. You simply might have to enter the market more than once. However, if on that first move you're proved to be on the wrong side of the market, then you won't be compelled to enter the market a second time. So where this was, because we only look for 4 ticks in bonds because they pay 31.25 per tick. S&P, we're looking for 8 ticks. The Russell, Crude, Gold, 10 ticks. Okay, so that covers that. We covered Crude already. The euro, the alert on the euro was 60 was to be short below. Now, there was a typo. I know those of you that follow the alerts every night know that's supposed to be an 8. So if you didn't trade it because you actually thought I was looking for a 00 down here, I don't blame you. It's okay. No harm, no foul. On this move here, 8 ticks, 8 ticks. That's all the market gave. And then we have the big drop, which took us all the way down to a swing low of 812. So from 80 to 812, that's 68 ticks at 1250 per tick. So 68 times 1250, that's 850 per contract. Okay, but again, nobody gets out at the exact swing low. You're going to trail your stop, and as price raced back up, depending upon how closely you're trailing that stop. Now, you may have simply said, I'm going to get my goal for the day and I'm done. If that was you, that happened here. But if you were trading here, heading into the Wall Street Open, okay, then you were able to trail well beyond your daily goal by about 8 times. But then at some point, based on how far you were trailing that stop, that's where you were taken out of the market. That's the truth about trading, okay? No funny business. That's just the cold, hard, brutal truth. You're going to get stomped out. It's not a matter of if, not even really a matter of when, because when you get stomped out, it's just another trade. You have your daily, you have your trade, you have your setup, and you simply, it's like working in a widget factory. It gets, now if you want to be a wildcatter and be a big name on Wall Street and get on CNBC, well, that's a whole nother issue, and best of luck. If you simply want to learn to be a trader who can be consistently profitable in the markets day after day after day and earn an above average living, that is doable. That is realistic. The problem is the media and the internet and email put so many incredibly unrealistic expectations in the heads of so many people that is the very reason we end up with a 90% line and a 10% line. And the people in the 90% line are scratching their head, going, what happened? They're not bad people. They're not in the 90% line because they were evil or had ill intent. The 90% line is full of good people, caring people, people who wanted to do wonderful things with their profits. Whether it was build churches or build hospitals or build orphanages, feed the hungry, clothe the naked, you name it. They're not there because they're bad. They're there because no one took the time to teach them how to think in probabilities and to be extremely disciplined in their approach to trading. That's really all it takes. You need to have a definable edge in the market. Doesn't have to be a definable edge, just a simple edge in the market. Understand that this is a business of probabilities. It's what it's based on. And then learn to be disciplined with your risk management. There's 3 legs to the trading stool: the mechanics, the methodology, and the psychology. While you're in the simulator, if you're trading with us, as you're putting your 10 days together back to back, you're going to get the mechanics nailed. That's what button to click, when and where. The methodology, because in the live trading room, we're only going to use 2 trade setups, period, for all markets, just 2 setups. You'll get the methodology nailed during your 10 days in the simulator. And you'll start to get a feel for the psychology that's going to be involved. But it's not until that real money is on the line that you start to wrestle. So I just want you to know, if you're at that point where you're going live Monday, or maybe you went live today, whenever you go live, it's going to be a shock to your senses. Okay? It's going to rattle your cage. I don't care who you are. And you go, well, yeah, but it's just $100. It's no big deal. I got plenty of money. I spent $100 taking my wife to lunch. Okay. However, see, when you spend $100 taking your wife to lunch, that proves that you're a man who's made it. So you don't cringe when you pay the bill. You pay it proudly. But when you put on a trade, 1 contract in the S&P 500, you only had to put up $500 margin to put the trade on, and you've got a hard stop that says you're not going to lose more than $100, that same $100 that you'll take your wife to lunch with, you become a different person. Because remember, when you pay for that lunch, that shows that you're the man. You made it. You arrived. You can spend $100 on lunch. But now, this $100 flapping in the breeze, this is also going to measure you as a man. as a trader. See, that's the problem. That's how our minds work, our lizard brain. What you have to get a hold of is that the outcome of the next trade in no way defines who you are as a man or a woman or even as a trader. No one trade, no series of trades defines who you are. Your rule set and your ability to follow the rules that you write into your business plan and your trading plan, that defines who you are as a trader. And I hate to say it, but trading is not suitable for all people. You've seen it written, you've heard it said, that you can lose all of your money and then some. That's a true story. If you trade with us, I don't want to say that you can't blow up your account. But if you follow the rules, it's going to be very hard. Because number one, you first have to prove yourself consistently profitable to get into the live market. And then once you're in there, if things go awry, we're not going to leave you to bleed out on the trading floor. We're going to grab you by the legs and pull you back into sim. Hopefully you'll just walk back in and nobody will have to drag you. When you go from sim to live, if it becomes obvious that you need to go back to sim, that is no walk of shame. It's simply a smart business decision. Okay, I got the mechanics. I got the methodology. Apparently, I don't quite have the psychology yet. No big deal. You step back into sim and you work on it. You work on it. The gentleman I spoke to this morning, he did well with one contract. He didn't stay with one contract very long. Not by our standards. And then he added his second contract, and he was doing really well with two contracts. He didn't stay with it very long, though. Not based on our standards, but he was working with a different educator and different standards. And when he hit the third contract, completely blew him out of the water. And it began a downward spiral that lasted for a number of months. He finally made the walk back into sim, but the problem is by the time he went back to sim, based on, and it was very heart-touching, and I hope to speak with him again in the next couple of days because I really want to encourage him, because I hear in his voice that he's got what it takes. So he just needs, really, I think, some encouragement. He let it go too far, and so the psychological scars and the mental scars, those are more difficult to overcome than the financial scars. When we make mistakes in our trading and we begin to put on unprofitable trades, not losing trades or winning trades, those are gambling terms. When we make unprofitable business decisions, that's what an unprofitable trade is. You made a business decision and it wasn't profitable. Well, that happens every day to business people, okay? Now, you may have a string of unprofitable decisions and a string of profitable decisions. What worries me more than anything is the guy who's dancing on his desktop because of how well he did today, because tomorrow he'll be the guy that's curled up in a fetal position underneath his desk, hopefully crying out for help, because until you tell us that you need help, we don't know. Those of you that have the material for writing the business plan and the trading plan, it's repeated in there many, 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 many times. You're only as sick as your secrets, okay? As long as you're upfront and honest with us, we can help you figure out whatever the problem is, okay? If you're all over the place, we can try to help you, okay? If you're repeatedly doing something that is causing you to be unprofitable, we can get laser focused on that, work with you on that, challenge you on that, have you record yourself until you get it down. And then once you overcome that, man, you might just sail for 2, 3, 4 months, and then there'll be some other thing, some other rock that gets, some pebble that gets in your shoe. Okay, are you going to walk a mile in that shoe, or are you going to sit down and shake them? That's what we're here for. All right, I think we covered everything. We talked S&P, we talked bonds, we talked Dow, we talked crude, we talked euro, we talked Russell, we talked gold. That's it. That's all I got. It is the weekend, so please spend some quality time with your family. Okay? Oh, I see a couple questions. Joel, do both you and Michael handle mentoring sessions? We do. Primarily, I will take them at first. But if you'd like to meet with Michael, you certainly can. Either one. When you book your appointment, just type in there, I'd like to meet with Dwayne, or I'd like to meet with Michael. Patrick, interesting that section has very low volumes. Oh, you're talking about the overnight session that I went through? Okay. Off the London Open, that kind of thing? Okay. Yeah. Yeah, in fact, what you can do, Patrick, is on any chart, just put a volume. And by the way, what charting platform are you using? You can see the times of day where volume is very light and when it picks up. And by and large, that pattern will repeat itself day after day after day. Okay. Now, in early December, if I roll back to early December, you'll see that the volume is very low. That's because in the beginning of December, or in the middle of December, we rolled into the March contract on the S&P, the Russell, the Dow, the NASDAQ. So now that we're in full swing with the March contract, we're getting more volume, really good volume in the euro today. Okay. And this hour that spiked, that was on the jobs report here in the U.S. I think Canada had a jobs report too at the same time. We traded 53,000 contracts in the euro in that hour. So for those of you, I still encourage, I know we were going to start a live trading room off the London Open, but we've been so busy. We've got so many different things going on. I still want to do it. Someday we will do it. I wish I could say I'm going to do it Monday morning, but that requires, for the 3 a.m. Eastern, I'm in Phoenix on Mountain Time. For the year, I'm on Pacific Time. Right now, I'm on Mountain Time. I'd have to get up at 1 a.m. Yeah, I'd have to get up at 1 a.m. I'd have to get up at midnight. Most nights, I'm not even in bed by midnight, because I'm getting the weekly, not the weekly trading zones, but I'm getting the Concierge Trade Alerts out, and I've got to post charts to the Google Plus page, and there's just so much to be done. I either need a 48-hour day, or I need a mini me, or something. But we'll figure it out. Todd, you ask a question. Where do I go to sign up for the free trades? I'll show you. You go here. CFRN.net. Free Emini trades. I'll put it in the chat box. There you go. So that's for anyone. If you sign up today, tomorrow you'll get another email that instructs you to pick a username and a password. Okay? And then that will allow you into the free trade area. You can see all the free trades that we've given since. This is just something we started in October. As you all know, the Concierge Trade Alerts, we gave away those trades for 3 years. Go to our Twitter page, twitter.com/CFRN. You can go back almost 5 years now and see the 3 years of trades that we were giving out. You can also find us on CFRN. You can find us on StockTwits. We're pretty easily found on the net. But if the Twitter page is the best play. Now, the final year of the free trades, you'll find, I think, most of those on the Google Plus page. Now, that Google Plus page, when you go there, you scroll to the bottom. You think you're at the bottom, but you look and you realize you're not. That, I don't even know how far back that thing goes. I know it's got to be 2 years at least. And on that page, you'll find webinars, seminars, Q&A sessions. You'll find charts. You'll find articles. You'll find each day's radio show, full video, audio. So anytime you miss a daily show, you can go to iTunes, or you can go to our Google Plus blog. And like today's show, as soon as I sign off, takes about an hour. It'll be available on our iTunes channel, or it'll be available on the Google Plus channel. It'll also be available on our YouTube channel, youtube.com/CFRN. Okay. We stream 24/7. We're now in our 2nd decade. So anytime you need spiritual encouragement, you need a little pick-me-up, you need to know that you're not alone in the world, just go to our homepage. Click Listen Live now. Or download one of the mini apps that you'll find that carry our station, such as TuneIn Radio or Stitcher. You open up the TuneIn Radio app, search CFRN, will pop right up. Make that one of your favorites. Okay. And on days that you're going to miss the show, you can actually, if you get the pro version, the free version is free. The pro version, I think it's $2 or $3. You can actually record the show yourself, so you don't have to wait for me to upload the recording. Now, because we stream live on YouTube, right now we're streaming live on YouTube. So as soon as I'm done, that thing will start to render, and within about 30 minutes, it will be available before I even get it uploaded to the Google Plus page. Okay, Todd says, I think what would be great is have one live trading session at some time where you show the other 5 trades. That would be awesome. What other 5 trades, Todd? Are you talking about the partner trades? Oh, the partner trades? Well, that's what the partners workshops are for. Brother, we already got so much work to do every day. To add an additional session is just not possible at this time. I mean, I've been up since before the markets opened this morning, and my last mentoring session is about 6 o'clock tonight, my time. The next free trade will come out Sunday night at 7 p.m. Eastern. Next free trade will come out Sunday night, 7 p.m. Eastern. Last Sunday night's trade was to short the Russell at 11.25 with 11.30 as the stop loss. First target was 11.18. Second target was 1101. The third target was 1080. Plus, we had a bounce trade that we took advantage of between the second and third target. And that's all disclosed. All of the information is on the free trades page. Now remember, when you sign up for the free trades, you're going to get a confirmation email. You got to click the confirmation link. And the next day, you're going to get an email that sends you to the registration page to pick a username and a password. Once you do that, you'll have access to all the past free trades since we started that particular page back in October. Okay? Okay. Yes, Todd. There's a couple of ways to trade the markets. We teach you in the live trading room each day how to make $100 per contract per day. Put the mouse away. Over time, build the number of contracts that you trade. Once you've learned how to successfully do that and you've built up a significant, then you can hunt for bigger game. But I keep telling you, you're not going to get there unless you can stay focused. You've got to learn how to trade first. Now, you're on my list for a mentoring session this afternoon. Okay? So write down whatever questions you have for me, because I'm only going to have a limited amount of time to spend with you. We were just at a partners workshop last night. You had a lot of questions in. We got them answered. We answered your questions today in the live trading room. So whatever questions you're going to have for me, have those written down this afternoon so that we can get through as many of them as possible in the time that we have available. Okay? All right. And Patrick, great question. Does volume play into any of the proprietary indicators and oscillators? No. When the market is slow, with low volume, it just takes longer for the trade to come to fruition. In other words, in the live trading room, you'll have 10 ticks for the day in 3 minutes, 5 minutes, 20 minutes, whatever it takes. But during the Asian session, as an example, that same trade might take 2 or 3 hours because there simply isn't the volatility. The volume's not so much the issue as it is the volatility. You got to have movement. Okay? Now, a lot of people say, well, I want to trade the S&P because of the liquidity. Okay? That's meaningful if you're a 30, 50, 100 contract trader. If you're trading one contract, you don't have to worry about liquidity. Now, does it make sense to train in a market that ultimately you can grow your business that large if you want to? Yeah, it's not a bad idea. But while you're in training, I mean, there's an awful lot of good movement in markets like crude and the Russell and gold. Gold is a market that can be traded literally around the clock. Crude can be traded almost around the clock. The euro, which we're looking at here. See, even on these small 1,600 contracts, 1,500 contracts, 18. So remember, S&P, euro, gold, crude. Those are good to go almost around the clock. Watch the London Open. The Dow's getting stronger. There's more participation. The Russell's getting stronger. There's more participation. I think there'll come a day where, well, I don't know that Globex will ever equal Wall Street, but over the last 5 years, it's been steadily gaining ground. You know, it's no longer the shadow market. It's really becoming a market unto itself. All right, let's see. If I missed any questions, guys, please email them to support@CFRN. Joel, where can you sign up for the personal mentoring? Right here. CFRN.net. Emini personal mentoring. Okay, I'll put that in the chat box as well. Okay. All right. I got to run, guys. Listen, thank you so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no good than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always agent and consult with a licensed securities broker or financial planner before making any investment decision.
Hey you, trader, why the sad face? Bad day in the markets? Bad year in the markets? If you're like many other traders I've met recently, you're about to give up, go broke, or both. They say the definition of insanity is when people continue doing the same thing and expect results. Sound like you? You've invested a lot of time and money in this trading business, right? Well, before you give up or go broke, let's just take off the crazy hat for a moment, okay? Forget the schemes and scams that litter the internet. That 80% win ratio in his dreams and your nightmares. The 89 consecutive winning trades guy? Liar, liar, pants on fire. It really comes down to what actually works. At the end of the day, who can you really trust on your way to Wall Street? Here's a thought. What if you could spend day after day with seasoned traders and market analysts? What if you could cut through the theory and simply see real-time trades and strategies that work? Debunk the myths and learn the ropes. Cut the risks by avoiding simple mistakes. How much do you think that would be worth in the long run? If you could literally shave years off the learning curve and keep tens of thousands of dollars in your account for the actual purpose of trading, would that be of great value to you? Would that be the definition of doing something different? Right now, CFRN has a limited time offer. I want to invite you to spend a full week with the CFRN team. I want you to test drive our online platform and feel the power of our custom indicators for an entire week. I want you to witness real trades with real money in real time. I want you to see a humble, ethical, and proven trading system that's simple and, more importantly, that works. You can pass this off as just another sales pitch. You can risk tens of thousands of dollars and several years of your life in an attempt to prove me wrong. Or you can come hang out with us for just 1 week. No strings attached, no credit card required. All we require is a simple desire to learn. Stop the insanity today. Test drive our platform and indicators for 1 full week. Trade with us live for 1 full week. No strings attached, no credit card required. If I'm wrong, there'll be plenty of time to give up or go broke next week. So act today. This is a limited time, sensitive offer. To get started, visit www.cfrn.net. That's www.cfrn.net. CFRN, a community of believers who trade for a living.
This podcast is brought to you by System Runner. To test drive a breakthrough in automated forex trading and to open a demo account today, visit www.systemrunner.com.
Hello and welcome to the Mind of a Trader. This is Steve Croft. Back in the 60s and 70s, there was an author by the name of Dr. Maxwell Maltz. He died in 1975. And he stated, our self-image and our habits tend to go together. Change one, you'll automatically change the other. This is so true in our trading. If you think of one of the strongest emotions that have an impact on our self-image, is one of fear. How does it impact our self-image? And can that result in a change in the way we do our day-to-day steps, our habits, the processes that we go through? Fear is a very powerful emotion. It's an important survival mechanism. It keeps us away from danger. It makes us plan. It makes us change. It makes us evolve. None of us like fear. We generally try to avoid it, and sometimes it can even affect our judgment. It can cloud the way that we think. It can cloud our